Hi, my name is Daniel Song, and my project is a stock price movement prediction based on multi-stage financial models and cross-period comparisons. Many people have a vivid memory of the stock market crash in March of 2020 due to unbridled global fears about the spread of COVID-19, oil price drops, and the possibility of a severe recession. 4 circuit breakers in only 8 trading days ended the longest bull market in the history of the United States. However, the market rebounded dramatically in summer, resulting in the shortest bear market in US history. 2020 was a hectic year for both Wall Street and the world at large, with unprecedented volatility and numerous risks and opportunities. How should an investor rely on a calm mind and rational analysis to make the most appropriate investment decisions? And what will be the best approach to improve the accuracy of stock price predictions? My project aims to answer these 2 questions with a 2-part model. This project has selected Johnson & Johnson as a microcosm to examine the healthcare industry and the stock market as a whole through 2 steps: qualitative and quantitative analysis. The qualitative analysis is the first step, comprised of micro and macro analysis with Porter's 5 forces, SWOT, and PESTLE. These models aim to present a deep, thorough, and detailed dissection of Johnson & Johnson's business, as well as the macro and micro factors that affect the company. My quantitative analysis is comprised of a multiple linear regression, which will select the best time period for data, and absolute relative valuations, as well as financial modeling. This will all be aggregated into a football field analysis valuation range. Johnson & Johnson is valued at over $400 billion and operates in over 60 countries. It is one of the world's leading healthcare companies. My first qualitative analysis model is the Porter's 5 forces. It is comprised of 5 factors: supplier bargaining power, competitive rivalry, consumer bargaining power, the threat of substitutes, and the threat of new entrants. My second qualitative model is SWOT, which is strengths, weaknesses, opportunities, and threats. My third qualitative model is the PESTLE, which is comprised of political, economical, social, technological, legal, and environmental factors. The multiple linear regression is my first quantitative analysis result. This aims to identify different time periods to find the most normalized period for financial input, given the severe impact of COVID-19 on financial data. The first step in multiple linear regression is to select variables. 5 variables correspond with x1, x2, x3, x4, and x5. These are selected as the independent variables. Then, a correlation analysis is performed to exclude the variables with the violation of collinearity. According to the pairwise correlation, to have a robust feature selection, I have used a correlation coefficient as a criteria and set it at 0.7. Based on the data analysis tools in Excel, the correlation coefficients between x1 and x4, as well as x2 and x3, are greater than 0.9, meaning that these 2 variables have a strong correlation. Thus, 2 sets of variables are chosen as the independent variables for regression modeling. The first set includes net earnings, CAPEX, and interest rate, x1, x2, and x5. And the second set includes net earnings, working capital, and interest rate, x1, x3, and x5. The second step is to run regression models with the selected variable sets. Considering the significant impact of COVID-19 on the stock market, I have adopted a cross-period comparison method to compare the 2 periods, 2014 to 2019 and 2015 to 2020 data. The average annual stock closing price is the dependent variable. Among the 4 results as shown on the right side, data from the 2014 to 2019 time period has demonstrated a better statistical linear relationship than data from the 2015 to 2020 variable data set in both sets. Thus, the 2014 to 2019 data period is more accurate for predicting stock prices under normal, i.e. non-pandemic circumstances. And this project has used 2014 to 2019 data for financial models instead of the conventional 5 years. Absolute valuation models calculate the present worth of businesses and they attempt to find the intrinsic value of an investment based on the fundamentals and forecast the investment's future performance. I have chosen the 2-stage free cash flow to the firm, or FCFF model, to discover and analyze Johnson & Johnson's actual value. The model sums the present values of FCFF in both the high growth and stable growth phases to arrive at the fair value of the firm. The two-stage FCFF calculations are shown on the slide tables. It is worth mentioning that I have used data from 2014 to 2019 as per my multiple linear regression results. There are two main variables in the FCFF calculation. The first is WACC, or the weighted average cost of capital. This is a measure that a company is expected to pay on average to all of its security holders, so both debt and equity, to finance its assets. The second is the FCFF growth rate, denoted by G. Based on these assumptions, the predicted stock price for Johnson & Johnson is $198.39. However, since the future cannot be predicted with any certainty, a sensitivity analysis has been conducted to analyze how even a slight change in both the WACC and/or long-term growth rate can have a significant impact on the forecasted stock prices. In addition to absolute valuation, relative valuation models use financial ratios such as price to earnings, PE, price to sales, PS, enterprise value to earnings before interest, taxes, depreciation, and amortization, which is EV over EBITDA metrics, to assess the company's value relative to its industry peers. The results show that Johnson & Johnson has an attractive valuation compared to its industry competitors. Aside from both the absolute and relative valuations, financial modeling is based on the ratio of EV to EBITDA in its forecast of three scenarios: a blue sky or optimistic scenario, a gray sky or pessimistic scenario, and a target price. These scenario prices will depend on how EBITDA is estimated and the EV to EBITDA ratio. In conclusion, I have used a business or qualitative analysis to offer a detailed dissection of Johnson & Johnson's business model to find out its strengths and challenges and analyze the macro and microeconomic factors affecting the business. I've also conducted quantitative analyses with multiple linear regression producing a result that the 2014 to 2019 data period is more accurate for predicting stock prices under normal non-pandemic circumstances instead of the conventional most recent 5 years. My two-stage FCFF model may be too optimistic, depending on the spread of COVID-19, increasing inflation, and supply chain pressures, all of which may affect the growth rate. My relative valuation offers an expected range, allowing for improved or deteriorated forecasts. All of my valuations have been summarized and aggregated in the football field chart. Johnson & Johnson stock presents good value with an expected price range of about $155 to $185. It is very important to note that all of these predictions are based on no major changes in the J&J business structure. However, the company recently announced that they will be splitting into two companies in the near future. Some of my future work will include comparing predictions with the 2021 annual report and introducing more micro and macroeconomic variables to build multiple linear regression and using principal component analysis, or PCA. I will also analyze my macro and microanalysis models as they are partially applicable to the entire pharmaceutical industry and stock market as a large whole. I will also analyze the Johnson & Johnson business split and its impacts on financial modeling. Most of my data comes from the Johnson & Johnson website and Yahoo Finance. The rest of my sources can also be seen on the slide. I would like to thank my advisor, Ms. Michelle Lee, for teaching me key concepts in both economics and finance, which were important to me completing the project, and offering constructive criticisms and suggestions and guidance during the entire research project. I would also like to thank my parents for supporting and encouraging me throughout this entire journey. Thank you for your time and listening to my project.